Hello and welcome back to the Financial Freedom Show. If you're new here, be sure to hit the like button and subscribe in order to stay up to date with the latest videos we post on the channel. In today's video, we're going to be talking about SCHD and why it's going to destroy other dividend ETFs in 2025. If you enjoyed the video, please be sure once again to hit the like button and subscribe to stay up to date with the latest videos we produce. If you are buying SCHD in your portfolio, let us know in the comments down below. And if you'd like your name to be featured at the end of every single video we produce, be sure to check out the membership program in the description. You can have your name featured at the end of every single video, as well as access to our private Discord and access to videos a day before we publish them on our channel. So without further ado, let's get into today's video. Today we're going to be talking about SCHD and why it's going to outperform other dividend ETFs in 2025. Dividend-focused ETFs have gained immense popularity among investors seeking consistent income and long-term growth. Among the myriad of options available, the SCHD US Dividend Equity ETF has solidified its reputation as one of the most reliable and efficient dividend ETFs. Looking ahead to 2025, SCHD is poised to dominate the space and outperform its competitors for several compelling reasons, including its superior stock selection methodology, low expense ratio, strong historical performance, and alignment with investor priorities. SCHD's success stems from its carefully curated portfolio, which focuses on high-quality dividend-paying companies. Unlike some ETFs that prioritize dividend yield alone, SCHD's methodology goes deeper. It screens for companies with a strong history of dividend payouts, robust financial health, and sustainable payout ratios. This ensures that its holdings are not only paying dividends today, but are also well positioned to maintain and grow their payouts in the future. Moreover, SCHD places a strong emphasis on companies with high returns on equity, or ROE, and consistent cash flow. These metrics are crucial in identifying businesses with a proven ability to generate profits and reward shareholders over time. By focusing on quality over quantity, SCHD avoids the pitfalls of chasing risky, high-yield stocks that may face sustainability issues, a common flaw in many other ETFs. Cost efficiency is another area where SCHD stands out. With an expense ratio of just 0.06%, it's one of the most cost-effective dividend ETFs in the market. In comparison, many other dividend-focused ETFs charge significantly higher fees, which can eat into long-term returns. For investors, minimizing fees is especially crucial when pursuing a dividend strategy. Over time, the savings from SCHD's low expense ratio can compound, contributing to higher net returns compared to ETFs with similar objectives but higher fees. This cost advantage gives SCHD a significant edge over its competitors, making it an attractive choice for dividend-focused investors or income-seeking investors. SCHD's historical performance has been nothing short of impressive. It's consistently delivered strong total returns by balancing dividend income with capital appreciation. This combination of growth and income is a major factor that sets SCHD apart from its peers. While some dividend ETFs focus solely on income and sacrifice their growth potential, SCHD strikes a balance that appeals to a broad range of investors. Its ability to deliver competitive returns, even during market volatility, showcases its resilience of its portfolio and the strength of its underlying strategy. As we move into 2025, SCHD's track record will likely continue to attract investors who value stability, consistent income, and growth potential. Its diversified holdings in sectors like healthcare, consumer staples, and technology further enhance its ability to weather economic uncertainties and capitalize on opportunities. SCHD's growing popularity is also due to its alignment with what investors truly want: reliable income, low costs, and simplicity. The ETF provides quarterly dividend payments, which makes it an excellent choice for retirees and income-focused investors who rely on regular cash flow. Additionally, SCHD's transparency and ease of use make it appealing to both seasoned investors and newcomers. Its straightforward approach eliminates the complexity found in some other ETFs that rely on exotic strategies or niche sectors. This simplicity, combined with its performance and cost advantages, positions SCHD as a clear winner in the dividend ETF space. While SCHD strengthens its position, many competing dividend ETFs face challenges that could hinder their performance in 2025. For example, high fees. Many alternatives, such as actively managed funds, charge significantly higher fees, reducing their appeal to cost-conscious investors. Overweight in risky high-yield stocks. Some ETFs prioritize yield at the expense of quality, exposing investors to unnecessary risk and potential dividend cuts. And less efficient strategies. Many competitors lack the disciplined, rules-based approach that SCHD employs, leading to less consistent performance over time. SCHD's ability to avoid these pitfalls ensures that it remains a go-to choice for investors who are seeking reliable and efficient dividend income. Dividend investing has long been a reliable strategy for those seeking consistent income and long-term growth. In 2025, this investment approach is poised to become even more prominent as market conditions and investor priorities align with its core strengths. While there are many dividend-focused ETFs available, some funds are better positioned to capitalize on this trend than others, with SCHD standing out as a clear leader. However, the focus here isn't on SCHD itself, but on the broader factors that will make dividend-focused strategies, like those employed by SCHD, outshine others in the coming year. In 2025, economic conditions are likely to favor dividend investing as market volatility and interest rate concerns continue to influence market behavior. After years of fluctuating interest rates, many investors are looking for stability and predictable income streams. Dividend-paying companies are known for their financial strength and steady cash flow, and are well positioned to provide this stability. Unlike growth-oriented investments that rely heavily on future predictions, dividend stocks offer tangible returns in the form of income. This becomes especially appealing during uncertain market conditions, where capital preservation and dependable payouts take precedent over speculative growth. Funds focused on quality dividend payers will naturally rise up as the top investors seek refuge in more reliable investments. The demographic dynamics of investing are shifting. As baby boomers continue to retire in large numbers, their need for income-producing assets is increasing. At the same time, millennials are entering the peak earning years and are beginning to prioritize financial stability and wealth building. Dividend ETFs bridge the gap between these two groups, offering retirees the income that they need, and younger investors the compounding growth they desire. In 2025, this dual appeal will continue to drive demand for dividend-focused ETFs. Investors across generations are recognizing that dividends provide both a hedge against inflation and a way to reinvest for exponential growth. This trend will boost the popularity of ETFs that focus on high-quality, sustainable dividends. One of the most crucial factors in dividend investing is quality. Specifically, investing in companies with strong fundamentals, consistent earnings, and a proven ability to grow and pay dividends. In 2025, funds that emphasize quality will likely outperform those that chase high yields at the expense of stability. Investors are increasingly wary of yield traps, where companies with unsustainably high payouts risk cutting their dividends during economic downturns. As a result, the focus is shifting towards ETFs that prioritize quality metrics such as high return on equity, manageable debt levels, and strong free cash flow. This approach ensures that investors not only receive consistent income, but also capital appreciation over time. One of the most overlooked aspects of dividend investing is the snowball effect created by reinvesting dividends. Over time, reinvested dividends can significantly boost total returns, especially when paired with companies that grow their payouts consistently. In 2025, this compounding effect will become even more valuable as investors adopt long-term strategies to maximize their returns. Dividend ETFs that focus on companies with a history of dividend growth are particularly well suited to benefit from this compounding effect. By reinvesting dividends, investors can take full advantage of the power of exponential growth, creating a self-reinforcing cycle of income and capital appreciation. Dividend ETFs in 2025 will also benefit from favorable trends in key sectors such as healthcare, technology, and consumer staples. These sectors are expected to remain resilient even amid potential economic uncertainties, providing both stability and growth opportunities. Healthcare, for example, continues to see increased demand due to an aging population and advancements in medical technology. Meanwhile, technology companies that pay dividends have demonstrated their ability to balance innovation with shareholder returns. Consumer staples, which are a traditional safe haven during economic slowdowns, will also provide consistent income streams for dividend investors. Funds that significantly allocate assets across these sectors are likely to outperform, as they will capture both defensive and growth-oriented opportunities in the market. Another key factor driving the success of certain dividend ETFs in 2025 is the growing emphasis on cost efficiency. As investors become more cost-conscious, low-expense funds are gaining a competitive edge. ETFs with low fees enable investors to keep more of their returns, which is especially important for long-term dividend strategies. In a world where every basis point matters, funds with low costs are not just an attractive option, they're a necessity for maximizing wealth over time. This trend will continue to shape the ETF landscape and solidify the dominance of funds that prioritize cost efficiency. SCHD's winning combination of high-quality stock selection, cost efficiency, historical stock performance, and investor-focused design make it a standout in the dividend ETF space. As we look ahead to 2025, it's clear that SCHD is well positioned to outpace its competitors and deliver superior returns for its investors. Whether you're a retiree looking for consistent income or a long-term investor seeking growth and stability, SCHD offers the balance of both. With its proven track record of investing in disciplined companies, SCHD isn't just another dividend ETF, it's the benchmark for excellence in the field. For investors aiming to build wealth through dividends, SCHD remains the ultimate choice in 2025 and beyond. The combination of shifting market conditions, demographic trends, and investor priorities creates the perfect storm for dividend investing to thrive in 2025. As investors seek stability, income, and quality-focused dividend ETFs, they're uniquely positioned to meet these needs. While individual ETFs like SCHD lead the charge, the broader appeal of dividend investing lies in its ability to deliver consistent returns and long-term growth. By focusing on high-quality companies, sustainable payouts, and cost efficiency, dividend ETFs will not only outperform, but also become a cornerstone to many investors' portfolios in 2025. For those looking to weather market uncertainty while building wealth, dividend investing offers a perfect balance of reliability and growth potential. As the new year unfolds, the advantages of this strategy will become increasingly evident, making 2025 a standout year for dividend-focused funds. Hope you enjoyed today's video. If you did, be sure to hit the like button and subscribe to the Financial Freedom Show to stay up to date with the latest videos we post on the channel. Be sure to check out the membership link in the description down below, and if you do enjoy, be sure to comment if you are buying SCHD in your portfolio. Thanks for watching, and I'll see you in the next one.